All right, we're going to get started. Hello, everyone. Thanks for those that are on the call with us today. We are really excited to have our wonderful partners from Mountain America Credit Union here with us today to talk to us about insurance basics, answer questions that you may have, and perhaps dive into a little bit of details here and there with insurance. So Cass is with us and she'll be presenting to us today. So please give your full attention to Cass and I'll turn the time over to you.
Thank you. I'm sorry, every time I go to share my screen, everything changes up on me. And I'm like, no, come back.
We can see it just fine. I don't know if
Yeah.
it scrambles it on your end though.
Oh no, we're good. I just want to make sure that I can see everyone and I am keeping tabs on the chat. So I think I've got it pretty well squared away. All right. Well, yeah, thank you for attending this presentation. This is Insurance Basics. If you don't already know me, my name is Cass Puentes. I've worked with Mountain America now for almost 6 years as a financial education manager. So my job consists of going out to different organizations like yours and teaching basic financial principles and really helping people implement those so that they can ultimately achieve their financial dreams. Today, I really just want to kind of dig in and as I said to Brittany while we were getting everybody signed on, this is really kind of a review for a lot of us because as adults, we quickly jump into our firsthand experiences of insurance, but sometimes insurance can feel a little overwhelming. And so we're going to just kind of review some of the basics of insurance, referring back to why it's important and how it works. I'll hopefully give you some insights and tips, and then I'll talk a little bit about the different types of insurance. Now, one thing to note with this presentation is there are people who are licensed to price and to sell insurance, and I am not one of them. Okay, I can really give you the high level details and some tips and tricks based off of things that I've experienced, but really when it comes to any of these types of insurance and shopping and trying to get the best rates, we encourage you to work with somebody who is licensed, whether that is a broker or you're working with different folks from different insurance agencies to kind of compare to get the best rates and the best terms on your insurance plan. We'll stick with that for today. There's a better word for it. Yeah.
I just wanted to say too, and maybe ask is this is recorded and so it will go up on our YouTube channel. And would you say that this is a good presentation to share if you've got some kiddos at home that are getting close to the age of needing to know insurance basics, like sharing it with the family?
Absolutely. This is a great video to share with your teens as well. Sometimes it's a little bit easier to, I don't know why, but our teenagers kind of pick up better when it's coming from somebody else. And so, if your teen is like mine, it's helpful to show them things like this, and they kind of can get the gist of these concepts in that way. So let's go ahead and really jump in and start with just the basics of insurance. So again, for the folks on this call, you've already got some firsthand experience with insurance more than likely, but we want you to think about this in a little bit more depth. And really the goal is to help you better advocate for yourself when you are purchasing insurance, okay? So I'm just out of curiosity, and I know you all have access on the call to some reactions. Tell me, how often do you review or update your insurance coverage? Would you say it's every 6 months? If it is, give me a thumbs up. Anybody there reviewing every 6 months?
Never.
Maybe auto insurance or renter's insurance. Somebody asked if I was referring to health insurance, not necessarily. Some are you saying yearly? Awesome. Anybody take longer than yearly? Anybody do every 2 years or even when their premiums creep up? Awesome. So it looks like many of you are already in the habit of shopping yearly, which is really great. Only when the county makes us. That's fair. Yeah. Okay, and then reviewing every 10 months, good. And then depending on life insurance, that's another thing. It really all depends on the different types of insurances, right? We encourage people to shop at least yearly just because there are so many different factors that go into insurance. And shopping annually can help you just make sure that you're maintaining the best rate. So let's go ahead and let's talk a little bit about what insurance is. So for folks who don't already have experience with insurance, the idea of insurance is essentially a guarantee of compensation for some kind of loss, whether that is an accident, it's theft, it's damage, somebody gets sick, or they die unexpectedly. Okay. And why would I want insurance? Well, really, it has a lot to do with the peace of mind. Think about the cost of a home. The median cost of a home right now, I want to say, is somewhere in the high 400s. I could be misquoting that. But homes are really expensive, right? We're talking about hundreds of thousands of dollars here. And without insurance, if something happened to that home where it was, it burnt down, for example, you wouldn't have to come up with all that money to replace that home. And so insurance gives us this peace of mind that we're going to pay a portion of the amount to replace it, but we're not going to have to pay the entire amount if we have insurance. Okay. Now there's some interesting things here because when it comes to peace of mind, that looks a little bit different from one person to another. Some people, they just want the peace of mind that they're going to have to pay a little bit of it. Other people want the peace of mind that they're going to pay very little of it, maybe $500 or $1,000 to address an expensive loss. So one of the things that you want to be thinking about as you're shopping for insurance is how much am I willing to pay if something were to happen to one of my properties, whether it's my house, my car, maybe you have an RV or something else of that nature that you own and it has a high value. One other thing to keep in mind is that in some cases, your insurance is going to either be required by law or it may be required by a lender if you have a loan with someone. So for example, if you have a car and you have a loan on that car, your financial institution that you're borrowing the money from to pay for that car will likely require you to do a full coverage on your vehicle because technically they're the ones who own it until you pay it off. And they want to make sure that the property will be taken care of or protected if something happened to it. Specifically in Utah, just a fun fact, Utah law does require that drivers have a minimum of liability car insurance. Specifically, they have to have the bodily injury liability and the property damage. With these, there are specific limits. So for example, it's $30,000 per person, or excuse me, yes, for bodily injury, meaning if somebody got hurt, they would essentially be able to use that insurance if you were at fault in the incident. They do require $65,000 per accident for bodily injury and $25,000 per accident for property damage. And then Utah also requires a personal injury protection of at least $3,000, which is essentially there to protect you from being sued for injuries that someone else sustains if you are at fault. Okay. The PIP or the personal injury protection is really for you. But yeah, these different things are there because, again, if you caused $30,000 of bodily injury to somebody, again, it wouldn't be something that would be easy for most of us to come up with that money and just take care of, right? And so having to only pay a small amount of that will help us in terms of maintaining our financial stability. So when it comes to insurance, it's one of those things where you buy it, but you try not to use it. And it has a lot to do with how the insurance companies work. And so insurance companies operate because they're able to collect money from everyone who essentially pays in to this company. And then they expect that only a few are really going to need to use it. The only reason why this can work is because there are a large number of people contributing into the fund. Okay, if and you see this sometimes where if they start to have more incidents, they'll actually start to raise their prices to kind of compensate for the amount that they're paying out for insurance coverage on these incidents. And so folks have commented over the past few years, insurance monthly premiums, the amount that you pay each month, seems to be going up on a regular basis. And it seems to be increasing dramatically. And insurance companies have come out and said it has a lot to do with the number of claims that are being filed, the number of incidents related to the weather is one example. I'm trying to think if there's another. It was like mostly like the ones that I saw were related to weather. So, you know, tornadoes, heavy storms, things like that. Let's talk a little bit about how pricing works. Okay, we're actually going to dig into this just a little bit. So again, for those of you who already have experience with this, you likely have sat on the phone with somebody or you've met somebody in person and kind of talked about different details related to a specific type of insurance, whether it is a renter's or a homeowner's insurance or auto insurance, for example, or even like life insurance. So who assigns this pricing? How do they come up with it? Well, it's an actuary. So an actuary is a professional who will use math and statistics and different data points to figure out how likely incidents are to happen. Okay, especially things related to, you know, they look at risk and how much things would cost if certain things would happen. I like to think of them as like the fortune tellers, but instead of like a crystal ball, you're really they're really relying on, you know, data, like how often are people getting in car accidents, or different math models, and even just like some of the business knowledge that can help them be more effective in their decision making. So you'll often see actuaries in insurance, finance, even some pensions, and helping companies, you know, kind of answer some of these questions like how do we charge for car insurance, or how much do we need to save in order to cover future claims, or even what are the chances that we will lose money. And so there's different things that they will look for to help kind of assign your pricing on both premiums and deductibles. So let's talk a little bit about some factors that influence auto insurance premiums. Those of you who are online, if you don't mind putting in the chat, what do you think are some of the factors that influence your auto insurance premiums? Your age? Yep. Credit score? Good. Whether you have teenagers? Yeah. The place that you live, your accidents, driving history? Yes. The time you've been a customer, and whether you have policies that are bundled together, your driving, if you're getting tickets, and how often and how far you're driving. Yes. Out of curiosity, have any of you used the apps that kind of track your driving for a set amount of time, and they'll log you based on, you know, your phone usage or whether you're speeding or braking abruptly? Has anybody used that? Absolutely not. Yeah, so I think I've actually used it a few times. I am somebody who I'm like, the best value I can get, I will do what I need to do. And so sometimes they mail you this little tracker that you got to put in your car. But a lot of the times now you're just downloading an app on your phone, and they can detect, like they could detect that you're in a vehicle, your phone is in a vehicle and it's driving, and then they go off a lot off of your willingness to be truthful, right? And say, yes, I was a driver, no, as a passenger, something else. And so they try to track based on your driving. And recently I switched auto insurance because my premiums went up on my house and my car insurance went up, and I was like, this is too expensive. And the new insurance company was like, hey, we're gonna score your driving based on your speeding, based on cell phone use, and based on braking. And it's funny to see how much that influences behavior. I am not somebody who typically speeds. I don't typically have issues with phones. But I am somebody who, like, I get a little anxious around stoplights. I don't want to accidentally run a stoplight. And so you will find me, like, if that light goes yellow, I try to stop. And I've had a couple situations where I've maybe misjudged the timing, and it's happened kind of abruptly, and I get really upset when it upsets, like when it breaks my no heavy braking streak that I get going on. So it's silly. The longer you do it, the better they'll kind of work with you on your rate in some of these cases. And that's really what I'm after. I'm like the lower rate I can get. If it's something that you're interested in doing, Brittany, I would say call your insurance and see if they offer it. Even if you're looking, maybe you're doing it more so out of curiosity rather than trying to lower your insurance premium, but it's worth asking, hey, do you offer this kind of program that could benefit me, by saving money on my premiums, and see what they say. Because it really is it's a cool kind of thing to do. And it is fun if you have multiple drivers on your policy. You start to be a little competitive. So my spouse and I, we're neck and neck right now. I'm not gonna lie, he's probably the better driver, but that's okay. I'll deal with that. So getting into some of these important terms, you've heard me say premium multiple times now. Here's what I want you to remember about that. That is the amount of money that you either pay annually. Some of us pay semi-annually or twice a year, and some people pay once a month to have insurance coverage, okay? But then you have a deductible. And the deductible is basically the amount that you pay in. Let's say you file a claim or you have an incident, you will pay to file that before the insurance will take care of the rest when there's some kind of loss. So for example, if I get in a car accident, I may have an insurance deductible of $500 that I have to pay, and then the car could be completely damaged and they will pay the rest of it for me. Isn't that kind of beautiful? I actually had that happen a few years ago. In fact, I had an early morning drive from Layton to Salt Lake City, and there's a spot on I-15 that tends to kind of stop abruptly for no clear reason. And I was not familiar with driving in that area, and had some people stop abruptly. I was not able to stop in time and ended up rear-ending them. And so I paid my claim deductible, and then the rest, my car was total, the rest was taken care of. And I'm sure the person in front of me had some injuries related to whiplash, and the insurance was also covering their medical care as well. And so it's good for us to have these things. It's good for us to understand these terms, again, because this can influence your pricing. So I mentioned to you that the actuaries influence both the premium and the deductible pricing. And you can actually influence how much you're going to pay for each of these as you have that conversation with the person who's helping you set up your insurance. So for example, some insurance companies will actually lower your premium if you're willing to take on a higher deductible. So for example, many people might keep a $5,000 to $1,000 deductible on their vehicle so that if they file a claim, that's all that they have to pay. Some people may choose to go up to $1,500 or even $2,000, which then can help reduce the premium that they pay. Now, we talk about this in everyday financial success, right? Where we're saving for the things that might happen and the things that we know will happen. I would encourage you, even if you're taking those premiums and you're saving, have that money set aside so that if you do have to file a claim, it's not going to be an additional stressor in addition to having to deal with the claim in and of itself. Okay, and again, you can do that by just having a secondary savings account and even labeling it insurance deductibles so that you've got that coverage. One more important term that I want to talk to you about is the maximum amount or the coverage limit. Okay, in most types of insurance, this is going to be the amount that they cover and nothing beyond that. You'll also see this in for health insurance is a little bit different because with health insurance, you're talking about the out-of-pocket maximum, which is the maximum amount that you pay. And then after that, the insurance pays the rest. So let me give you an example where the insurance has the maximum coverage. So let's say, for example, you have homeowners insurance. Your coverage limit might be up to $50,000 for property damage and up to $100,000 for bodily injury per person. Okay. So it's important to know, to understand the maximum or the limit on your insurance coverage, because this affects your premiums. We talked a little bit about how deductibles affect your premium amount, but your limit will as well. So I want you to remember that higher limits equals higher premiums. Okay. If you want your insurance to cover more in case there's a big incident, that means the company is going to take on more risk, and therefore they will charge you more to pay for that or to potentially offset that loss. If you are willing to take on a lower limit, that often equates to lower premiums, meaning you're going to end up paying less, but you may end up having to pay more out of pocket if the damages exceed what your coverage limits are. And so it's important for you to, keep these terms in mind as you're shopping for insurance, and make sure that you're asking about them so that you know exactly what you're getting into. So kind of to keep this, to wrap up this section, I want you to remember that deductibles are what you are going to pay before your insurance kicks in. Your limits are what the insurance will pay after you pay your deductible. Okay. And then I want you to remember that the premium is what you are paying regularly, whether that's monthly, semi-annually, or annually, to pay for the insurance coverage itself. Okay. So let me ask you a question just to recap. Which of the following factors do you consider when you compare insurance policies? Is it, and there might be more than one, okay? Is it A, the premium, B, the deductible, C, whether the insurer has a mobile app, or D, maximum or coverage limit? So we definitely want to consider premium. Some of you are saying all. And that's not necessarily a bad thing, right? You might value that that mobile app for sure because it's convenient, right? But the three most important things that we want to factor in as we're comparing insurance policies, because many insurance companies now have their mobile apps. You definitely want to consider, though, what is the premium going to cost me? Is that, and sometimes you can even get a discount if you pay your premium all up front on an annual basis, for example. What is the deductible going to be if I have to file a claim? And what are the maximum or the coverage limits that I will have? Okay, so those are the three most important things. And then, of course, you can look at their mobile app and decide if it's something that's working for you too, for your convenience. Okay. Any questions from the group online before we move forward? Cool. Well, let's cruise then into our second objective, which is really where we're going to spend some time talking about the types of insurance. Now, for those of you who are new to insurance, you might be a little surprised to find that you'll need insurance like pretty much throughout your whole life. We have it labeled as 16 here because that's when most people start to drive, and so you'll need auto insurance coverage, but really it's likely that you've had some kind of health insurance coverage since you were born and throughout your life up to that point. Okay, so let's take a few minutes and let's talk about the different types of insurance that we offer. Before we do, though, I want to answer a question that came up in the chat. Is there an honest place you can reference to shop for all? So all the different types of insurance, honestly, I would say it's great to, compare different places. One of the easiest ways to do that is to work with an insurance broker or work with multiple insurance brokers, because then they can shop different companies for you and you don't have to do a ton of work. So I'll plug it because it's relevant, never required though, right? As with anything that we promote on behalf of Mountain America, it's never an obligation. It is worthwhile to note though that Mountain America does offer insurance services. So that shopping with a broker that I mentioned earlier, That's something that you can easily do. If you're interested in learning more about that, you can go to macu.com and under our top banner, you'll see services, and below that, you'll see insurance, and it'll take you over to Mountain America Insurance Services. Brittany says that she just recently used a broker and it was very nice. Yes, I agree. There are a few things that are more annoying than having to fill out a form that's almost identical time after time after time after time, right? And I did this recently. I skipped the broker and tried to do it myself, and I will tell you, it took way more time than I needed. And really, I don't think that I saved a whole lot more than what I would have saved or paid with a broker. So let's go in and let's talk about insurance, because there are tons of, there's a few different types of insurance that you can have. And some of you have already referenced these in the chat. Yes. Okay, I'm sorry, we're jumping around here, but I just want to call out Gwen's comment. She says she consulted with her broker when she needed to make a claim, and she got some really good unbiased advice. Gwen, I've been in a similar situation where I had a little incident with a car. This car was like very low to the ground, and I accidentally pulled the bumper off. And this is when I was younger. I'm a little bit of a better driver now, I'd like to think. But when that happened, I wanted to file the claim. It was a $500 deductible, and he said, Cass, you could get that repaired for $500, and then it won't stay on your insurance record. Like, we won't see a claim there. And that can actually influence the amount that you pay in premiums. And so to your point, Gwen, it's always good to have a third party who's unbiased, who can help you make those kinds of decisions. Is this worth filing a claim, or is it something that maybe I need to just pay out of pocket with? Yeah, great call out. All right, let's go and talk about car insurance, since we've kind of already been there for a minute. So there's a few terms that you want to be aware of with car insurance that are pretty specific. When we're talking about coverage, there's really a few different levels. I wouldn't say that one is necessarily better than the other. I would say that they're almost in their own columns, if you will. And you can have multiple let me use exact words here. Like, you could have liability and collision. We kind of, well, no, that's not necessarily true. I'll come back to that. So let's start with liability. So liability is really there to help pay for any injuries or damages that you cause to other people in their property, okay? And this is required by law. So think about, if maybe you're in the situation that I was in a couple of years ago, where I couldn't stop in time and I rear-ended somebody, and potentially caused them to have to go to physical therapy to rehab their spine because of the whiplash. What liability coverage does is it makes it so that the insurance pays for those kinds of incidents, okay? And because they know, like, legislators and folks who are making laws, they pretty well know. Most of us aren't walking around with $30,000, $40,000 in our bank accounts set aside so that we can pay for somebody's medical bill if we accidentally harm them, right? And this is why, one of the reasons why they require this kind of insurance to be carried. You can also get collision insurance. So this helps cover your vehicle if you are in an accident. It really helps to kind of repair the car. One of the things to note with collision insurance is there are people who will forego it if their car is paid off because they feel like they can save a little bit of money. How do I decide whether or not I should do that? Well, honestly, I would, speak to an insurance agent who can help you analyze the difference between what it costs to, repair that car out of pocket or even buy a new car, and what it would cost to insure it, okay? And then you also have the comprehensive insurance. And this is really, remember how I said there are multiple levels? So comprehensive is more so things that are not related to accidents. So this can be theft. It might be weather, if you accidentally, well, I don't know where hitting a deer falls. Perhaps it's under comprehensive. To me, that feels like an accident, but it could be wrong. Again, not an insurance agent. That's a great question for one, though. And you'll notice on here, it says that it is required if you have a loan. So again, we mentioned, some of these things are required by lenders. And that's really just to secure their investment and really help you get that vehicle, as your lender. So when your car is paid off, if you decide that it's not worth it to, invest in the comprehensive and the collision insurance, you can take those off of your plan. That might be beneficial for you. But again, it's helpful to talk to an insurance agent to really decide whether or not that's a good fit for you. Now, we've kind of already alluded to this, but this is a really great opportunity to talk about bundling, okay? So there are a variety of factors that impact the price of insurance. We've talked about some of these in the chat, right? It might be your driving habits. It could be where you live, your demographics, like your age, or whether you are male or female. There are all sorts of different things that can go into this. Even your credit score can impact the price of insurance. And I'll have some more information on that in just a minute. If you're like, what, why? I'll tell you in a minute. But one of the ways that you can help save is through bundling. Essentially, when you are bundling, you are purchasing more than one type of insurance. So for example, like auto and home insurance, you could purchase from the same company. And because of that, or if you have multiple drivers, different things like that, in many cases, insurers will offer a multi-policy discount. And so what this can do is it can help reduce your overall premium. Obviously, only having to pay one company is super simple and nice, but it can also help with some extra perks, really making it a practical way to help you save without having to sacrifice your coverage limits and, having to increase your deductibles to something higher, essentially helping with affordability. So then we have renter's insurance. So with renter's insurance, those of you who are on the chat, I have another quiz for you. Why is renter's insurance usually less expensive than homeowner's insurance? Is it A, because renters have fewer belongings than homeowners? B, renters are less likely to file insurance claims? C, renters don't need to insure the structure of the building? Or D, renters typically live in safer neighborhoods? Is it A, B, C, or D? We got a few C's coming in. Yes, good. So if you said C, you are correct, okay? Renter's insurance only covers personal belongings and liability. It doesn't cover the building itself. The building is actually the landlord's responsibility or the property owner's responsibility. And the property owner is required to cover the structure and its contents if you're a homeowner, which is what increases the price of the insurance. So keep in mind with renter's insurance, you're only really covering a few things. You're covering your stuff that is in the structure. You're also protecting you from being liable to somebody's, if somebody gets injured or if you accidentally damage somebody else's property. And then it also helps you pay for a place to live if something happens to your rental and it's damaged. You'd be surprised at the stories that are out there, sometimes related to the people who, the tenants who are living in the structure, sometimes related to the owners of the structure that have maybe not done the best job of taking care of the property, and how it can impact the renters that are living there. And so I think it goes without saying, but as you're, if you are looking for a place to rent, it's always good to, just like your landlord will kind of do the research on you to make sure that you are somebody who's trustworthy and reliable. It's a good idea to kind of see if you can do that same research on them, as well as the property that you'll be living on, to make sure that you're getting into a place that is hopefully pleasant to live in and doesn't cause a ton of stress. So next we're going to talk a little bit about health insurance, and then we'll talk a little bit about life insurance. We will get to homeowners. If you're like, wait, where did homeowners go? It's coming, don't worry. So with health insurance, It's important to know that because of the Affordable Care Act, you are able to stay on your parents' insurance until age 26. So as long as they'll let you stay on there, my advice to younger audiences is do that. Even if you have to, even if you pay a portion of that insurance premium and then you're paying your co-pays or any deductibles, it's possible that you may save money. Okay, again, always good to go and compare the numbers, but it's possible that you might save some money there. Okay, now when it comes to health insurance, you're probably familiar with it from your employer, or as maybe it's your parents whose employer you are covered under. But if you do not have access, maybe you're self-employed or you're a contract worker who does not have employer provided insurance, you can get it from the marketplace. Okay. Something to note is one of the more expensive things that can happen even with health insurance is seeing a provider who is outside of network. So the network is essentially doctors and nurses and different providers who agree to provide services with a specific insurance company. They basically go in, they make a contract that says, yes, I will agree to have you pay me this amount of money. And so in many cases, seeing that in-network doctor or going to that in-network hospital on your insurance is going to help you save money. And sometimes it can be huge. Okay. So look at that, especially as you're comparing insurance providers. I know in some cases, different employers will provide different types of plans. You might be looking at a plan that has your favorite doctor in it and a plan that doesn't. And even if you have to pay a little bit more for the plan that includes your doctor, you might feel like it's worth it to spend that extra so that you can see them without having to pay the out-of-network cost. Kind of going along the lines of some of the words we've already talked about that look familiar there. The deductible, this is what you will pay and then the insurance will kick in. From there, you might have a co-insurance or a co-pay. These are essentially agreed upon amounts that you will pay while the insurance is also paying their portion, okay? Now, another question for my friends online. Which of the following can lead to higher health insurance premiums? Is it A, using tobacco, B, participating in a wellness program, C, living in a low-cost area, or D, choosing a high deductible plan? Remember, higher health insurance premiums. Yes, everybody's saying A. Using tobacco can drive up your health insurance premiums dramatically. And so if you are somebody who is already using tobacco, I encourage you to find a program to help you, move away from that habit. If you are somebody who's not using tobacco currently, please don't start for many reasons, but mostly, in this case, think about it in the context of how much you'll have to pay to have your health insurance. Okay, now we're talking about life insurance. And again, this is a really great place where it's important for you to talk to somebody who knows a lot about insurance, who can tell you, the details. Things like defining the difference between a term life insurance and a whole life insurance. But what I want you to remember about this is life insurance, I want you to think of it as essentially a financial safety net for the people who survive should you pass away. Okay. In many cases, it can be used to help replace lost income or cover funeral costs, potential debt, or any future needs for the family members. So if you are somebody who has children, or maybe you're working on paying off a mortgage with a financial partner, it may be worthwhile for you to look into this. Okay. There are situations where employers do offer some kind of life insurance that might be worth looking into. The universal life insurance, it's actually not something that I am able to speak to. I would definitely do some research on it and maybe even reach out to a few different insurance providers to see if they can give you more insights on it. Great question. All right, I promised you we'd go over homeowners insurance, and the reason why we put it last is really because there's 2 slides, okay? And then we will be wrapping up here pretty quick. So in the homeowner's insurance, it's different from the renter's insurance in the sense that you are obligated to cover your dwelling and then any other structures that are on the property. Structures could be like a shed, but it could also be the concrete or the sidewalk that leads up to your home, which is really interesting to think about, right? Those are things that maybe we don't always consider. It can also be your personal property. So making sure that you have some protection in case you have property that's damaged due to a flood or if something is stolen. There's also liability insurance included. So if somebody is injured in your home, you will be able to leverage that homeowner's insurance to help pay for those, to help pay to resolve that. Now, one thing to note is that with typical homeowner's insurance, flood and earthquake insurance are not sold with the homeowner's insurance. So it's really important for you, if that is something that you are concerned about, you want to make sure that you have that kind of coverage, okay? I have in my notes here to mention repair value versus replacement value. These are important terms to speak with your insurance agent about, especially as you are looking at different policies. Some people really want to make sure that they have the money to do a full replacement on the damage. Other people are fine to fix or replace the damaged property minus the depreciation value. So you really want to, kind of know what you're getting so that you know exactly what to expect. Sorry, guys. All right. And then disability insurance. So disability insurance, there's a 25% chance in your life that you will need to use it. Some of us have already used it due to health issues, or perhaps we have used it as we've had children. There's different reasons why you might use a short-term disability. But really what this does is this helps provide part of your salary should you need to take time off. Your work will offer it, but you can also purchase a separate disability income insurance. And then in many cases, it's important to know that you might have to use like your sick days or your paid time off before you're able to take your disability insurance. So this is a great conversation to have with your HR provider if you're unsure how your disability insurance works. Now, there's also long-term disability, and this is really going to pick up where short-term leaves off. Again, you can get a plan through your employer in some cases, but then you also have the option to buy a private disability insurance. And this goes from, really all the way up to age 65, and it's up for any occupation. Last but not least, we'll cover long-term care insurance, and this is really just for kind of your end of life, whether that's living in a nursing home or having home health, or even, I don't like the term adult daycare, but essentially, some kind of care for you during the day. Perhaps like if you're living at home and your children are helping support you, but they go to work, you might have somebody who comes in, or you might go to a place that keeps you active during the day and offers that supervision, or even, some of the basic functioning things that tend to become a little bit more difficult in some people as they age. This is important to know. Health insurance, Medicare, these don't always cover this long-term insurance, and it's extremely expensive especially if you're older when you buy it. So again, if you have questions about these and you're like, do I need this? Do I not need this? It's a really great conversation to have with different insurance agencies so that you can start to get the information that you need to really piece it together. Again, it's always good if you can speak to somebody who isn't biased. So a broker might be somebody who's really helpful in this case. One more question before we wrap up. I've heard mixed things about life insurance. Some people think it's a scam. Why is that? Truth be told, I'm not able to answer that question for you. It's a good question. Again, one that is great to speak with an agent about because they can give you more insights and examples of why people might have that feeling. But Cassidy, you're not the only person who's heard that before. I know many people who have a similar sentiment, so you're not alone in that. Vanna says she has hospital insurance as well. Yeah, there's all sorts of different insurances that you can look into. And again, the best conversation is the one with an insurance agent who can really give you more insights. So we are at time. I want to thank you so much for those of you who have been online and been able to participate in the chat. I hope it's a little more active for you and engaging. And for those of you who are watching online, should you have any questions and you are interested in reaching out, you can reach me by email at cfuentes, CFUENTES @macu.com. Yes, where will we have this recording? I'm going to turn it back over to Brittany and I will let her answer that question for you.
Yeah, so the recording will be up on our webpage on the workshops tab within the next, I would say, 2 hours. WebEx takes a second to load, but as soon as it does, I will have it up and ready for you to watch again or share it with those that would be interested in learning more. I want to thank you all so much for attending our Insurance Basics workshop. It's always a pleasure to have Cass here with us, teaching and providing such good information and in a very understandable way. I feel like insurance can be very overwhelming because of all of these fancy terms or really long things that you need to read, and it just makes it so user-friendly to hear it from Cass. So I really appreciate that. It's always nice to have a refresher because it's a good reminder that we're not stuck in our current insurance situation, right? Like you said earlier, life changes and our coverage can too, as it should, right?
Yes.
So thank you for helping us navigate that. And I recommend you guys, if you have questions, Cass is a wonderful resource and please utilize that. We also provide points for getting financial wellness coaching, whatever that may look like, if that's under insurance or whatever that may be. We offer those points under bonus area, under the bonus area in WellStep. So utilize that as well. Thank you, Cass. You're awesome.
Sure
So
thing.
happy to have
Thanks.
you join us. If you guys have any other questions, put those in the chat right now, or you can reach out to Cass later. I'll stay on for a moment. Other than that, thanks everyone.
Thank you.